Hi, it's Randi at Cityscape Home Mortgage, and today I want to talk to you about an escrow account and how that works. I'm not going to lie, I went online, I was looking for other lenders to see how they describe this, and no wonder it's so freaking confusing for the whole world because I couldn't find a single video that just describes it in layman's terms. They wanted to throw out all kinds of crazy numbers and they just got really in the weeds, and so I'm going to do this different than everybody else. I'm going to explain this in the most simplest way that I can think of, and hopefully it makes sense. So here's the deal. An escrow account is basically a bank account. It's a non-interest bearing account. So as you collect money in an escrow account, nobody can make money off your money. That's the first thing that you should know. So an escrow account in the sense of mortgages is an account that's set up on your behalf to collect taxes and insurance so that the mortgage company can pay these bills when they're due on your behalf. So how does it work? Here's how it works. When you buy a house, you are going to prepay a full year of homeowners insurance in advance. These are part of your closing costs, and you're going to pay these when you close. You're also going to pay about a 3-month cushion, and that cushion is what sets up the escrow account going forward. So as you make your monthly payments, part of your payment, which is going to be the portion that's going to go toward your homeowner's insurance, gets put in this escrow account. And it's just going to sit there, and it's just going to wait until that bill is due again the following year. Then it's going to be paid on your behalf. Same thing with property taxes. And as you're making your monthly payments for the rest of the year, it goes into this escrow account that's going to collect that money for property taxes. Property taxes are always due in December in Oklahoma. So the beauty of having an escrow account is that you're not going to be hit with a huge property tax bill in December right at Christmas time when you're trying to buy presents for your family. It'll be paid on your behalf. So that's how escrow accounts work. You prepay and then you pay into it, and then they get paid on your behalf later. Now, a lot of people will say, well, I don't want an escrow account. I should just be able to pay my taxes and insurance on my own when they're due. Well, that's great, but not all loan types allow that. Most loan types are going to require that you escrow, and the reason for this is it just eliminates risk for the lender. We want to make sure that those property taxes and homeowners insurances are paid when they're due every time and on time. Now, you can get around this by doing a conventional loan with 20% down, because loans are based on skin in the game, and if you have a sizable down payment like that, you can waive escrows on a conventional loan. But most other loans are going to want you to escrow. So I hope this helps, and of course, if you have any questions at all on escrow accounts and how they work, I'd be happy to answer those questions for you. Just give me a call at 918-407-5303.